You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody, and welcome back to the podcast. I thought today that I would share some real-life examples. I've had a lot of people ask, what can I do with my banking system? What kinds of things can I use it for? So I thought I would just share some ideas from what some of my clients have done and some of the things that I've done. So I'm going to start with my first example of a client who, this was probably about 5 to 8 years ago or so, wanted to buy a house, and they didn't have enough money to finance the whole thing, as in they weren't going to be able to afford the mortgage payment if they had to finance the majority of the mortgage. And so they chose to access a life insurance loan of approximately $100,000 to put down on the house. And because of that, they were then able to control that portion of the loan. They financed the difference with the bank and had their mortgage payment. But the $100,000 loan they took from themselves, they had full control over. So for the time being, they decided, let's just pay interest only on that $100,000. And so because they were able to pay interest only on the $100,000 and didn't have to finance some of that amount or the majority of that amount, they were then able to afford this mortgage on this house that they really wanted. And in the meantime, their $100,000 is continuing to earn for them with interest and dividends as though they never touched it. So win, win, win. Another example, this is a common example that I've had more than one client has done this. It is just using the funds for a car. So I had a client who got in a car accident, no fun, at least they were okay, but then they needed a new car. So she reached out and she said, how much do I have access to? She had enough to buy a car in full, which is about $40,000 or $50,000. She took the funds from the policy and then asked, what do I have to pay myself back now for this? And so we created a loan repayment, but the good news is, again, she was in full control. So she was able to essentially make the payment whatever she wanted. Now, Nelson Nash would always say to pay yourself back with interest, similar to what you would pay another company or another bank that you'd be borrowing from. But at the same time, you really don't have to. You're not required to do that. And so because they had a budget crunch, she was able to pick a number that was affordable to her, and she would just pay on that loan a little bit longer to pay it off. And she said at that time, now I get it. Now I really get it why I'm so glad I have this system, and I'm so glad I've built this pool of cash, because I understand how cool it is to have this pool of cash when you need it for something like this, and then be in control of that payment. So she was very excited. I had another client just recently take their car to the shop and discovered that they went in for an oil change or something simple and discovered that the whole car was shot. The engine, he needed a new car. And so he reached out for some funds and was able to get the money needed to buy a new car. And he already had a loan repayment going back to his policy for another loan he had taken. And that loan was nearly paid off. So actually the amount that he was paying into it would be fine for him to just simply continue. Once that other loan would have essentially been paid off, it would just keep going now to replenish for the loan he had just taken for the car. And so he was excited too about being able to have control of that money, to not essentially have no car payment because he's not increasing any payments, but he had the money he needed to buy the car, and he's still earning on that amount, even though he borrowed against it or used that value to go out and buy himself a new car. I had another client who simply wanted to redo their deck in their backyard, and so took a loan for that and has replenished it. And also now their child is going to be going to college soon, and so they will be able to borrow against the plan for college needs. And sometimes, if depending on when you start a policy for a child, it may not have amounted to as much as you will need for college when they arrive or when they're starting college. But I often say, well, one thing you can do is you could just let those funds keep accumulating while they're in college. Let the child maybe pull out some loans or something that they need to help pay while they're in schools if they don't have all the money to pay at that time. And then once they're through with school, now they have a school loan or whatever it may be, then they can use the funds from the policy to pay that loan off or pay it down. And then they'll owe less money on their school loan. Some medical professionals have used their policies for purchasing items needed for their business. New machinery, different medical clinics, dental clinics, optometry clinics. And when they did that, we worked together to create a promissory note for their CPA and an amortization schedule. So we helped create that for them. And then they're able to take a legitimate loan from their banking policy. The business would be taking that loan, and then the business would be paying them back. And that worked out really well also, because then they get a very favorable loan that they can control again. And then we were able to provide the documentation needed for them to give to their CPA just to make sure everything was in order in case of a potential audit at some future point. The next example I have for you is to pay off the primary mortgage. Now, I wouldn't advise this to you just as a blanket statement for all people. However, for some people, it makes sense. Some people this is their primary goal. They want to get rid of this monthly payment and their plan to live there the rest of their lives or keep the house in the family. And it makes sense for them to pay off their mortgage. So that's another option that you could use your policy for, is to pay off the rest of your mortgage and then redirect that mortgage payment to yourself, to your banking system. And then you also have the control again. So you could also reduce that payment to yourself. The same option goes for any vacation rentals or Airbnbs you might have or rental houses. If that's something you want to pay off and just get rid of that debt obligation, that's certainly something that you could do. Again, not a blanket statement for all people. Another very common example is to pay off debts like credit card debts or loans. Paying off your debts to these outside banks will then help your credit. It will raise up your credit score. Also, it will give you the freedom of payment because you're in control of that payment again. So you can change that payment around, pay it off more quickly, pay it off more slowly. It also will improve the interest rate with which you're able to acquire new debt. If you have a good credit score, then you're going to have more favorable interest rates. And it helps you to eliminate your debt way more efficiently. You will end up being able to eliminate the debt completely in a way more efficient manner by doing it this way. Now, I give this other example all the time, but I'll say it again. It is great to use whole life and real estate hand in hand. So purchasing new real estate. In addition to rental property ideas, also people like to flip properties, buy them and make them nicer and then sell them for more. And so people will buy rentals with their policies and then cycle rent payments back to their policy to replenish those funds. Or if they do a flip, they'll access the policy for the down payment. They will make the payment to the house, buy the house, use whatever funds needed to fix up the house if they have it within their policy or some outside source. Then when they sell the house, they will replenish it back to the policy. I had a couple of clients recently who have loans who are about to increase in payment because the interest rates are going to be going up. One of them is a commercial loan, and their interest rate is going to be going up. And so that client reached out and asked, well, what do I have in my policy? Can I use it to pay off this loan if I so choose? And they do. They are able to pay off that loan and take over that mortgage. And then they do not have to endure the uncertain interest rates that are coming their way. They don't have to worry about that increasing cost. And they can keep the payment exactly the same as it is, or reduce it or increase it. They have full control over it. And in the meantime, their loan will be getting paid off much more efficiently. I had another client who reached out. They wanted to replace a fence, and so they pulled out funds to build a new fence. I myself last year used my policy to replace a roof. I also used it for new air conditioning, and other remodel projects. We used it for our children's private school costs and even for our taxes. So if I have to pay taxes, at least I'm going to be earning on the value of those dollars for the rest of my life. I mean, that's the best we're going to get out of that, is to keep earning on that money that I have to give over to the government. And you may ask, why? Why did you funnel so many things, common expenses like your roof and remodel or your private school, your taxes? Why did you run that through your banking system? Well, one reason is because I funnel so much money through there that I have to go there sometimes for those big projects. But then, of course, I love that I'm able to capture the earning power, and I want to capture the earning power of as many dollars as I possibly can for the rest of my life. So I would much rather funnel my money through policies, capture that earning power, and then use those dollars for whatever needs we come across. And my final example for today is, yes, let's say you do have a business or you are funneling a lot of money to something or your business, or you just have a lot of expenses that year. You had a lot more expenses than you thought, or maybe you had a loss of income, or one spouse stopped working or became laid off or hurt or disabled. And now you find your premium is coming due. You see your annual premium in the mail and you're like, oh, great. Now I have to pay for this. And I don't have the money because of one of these things has happened, some sort of tragedy or some sort of, that is, say, if your premium was an annual premium. And so they send you an invoice because your annual premium is becoming due. Well, one option that you have is simply allowing the policy to basically borrow against itself to pay the premium. So in a time of hardship like that, so long as there's funds in the policy, if you have something, an instance where you're having a hard time covering it, you could have it cover the whole premium or a portion of the premium. You could also have them switch the premium mode and switch it from annual to monthly. And now you just have, maybe you just need them to cover a couple months premium outside of or through the policy. But that also is an option as well to get you through a tough time. And it can bring you peace in a time of hardship. Well, that's all the examples I have for you today. So if you're feeling ready to start a banking system for you or your family and you'd like to partner with me, please reach out to Valerie at alphaomegawealth.com. I would love to help you. I would love to meet you. And I'd love to get you started on this exciting journey to change your financial future. I hope you enjoyed today's episode and that you found it informational. And I hope that you have a great week. Talk to you next time.
This is thepodcastfactory.com.